Real Estate A1 TV executive producer, director, author, chief editor Kashif Sohail, and our entire team of hundreds of presenters want to educate you about real estate. The topic is Real Estate Glossary of Terms. Balloon mortgage. Instead of a traditional fixed-rate mortgage in which the owner pays on the loan in installments, a balloon mortgage is paid in one lump sum, the balloon payment. It's usually associated with investment or construction projects issued for the short term and don't require collateral. A balloon mortgage is a less common type of mortgage, where the buyer is responsible for very low monthly payments, often just the accrued interest, but then must pay off the entirety of the loan at the end of the period, aka the balloon payment. Balloon mortgages are used for short-term loans, usually when the buyer doesn't expect to own the property for long. It's a mortgage with monthly payments often based on a 30-year amortization schedule, with the unpaid balance due in a lump sum payment at the end of a specific period, usually 5 or 7 years. The mortgage may contain the option to reset the interest rate to the current market rate and to extend the due date if certain conditions are met. Balloon mortgage is a mortgage where the final payment is considerably larger than the preceding payments, contrast with an amortized mortgage. Balloon payment. A large final payment is due at the end of a loan, typically a home or car loan, to pay off the amount your monthly payments didn't cover. Many states prohibit balloon payments in loans for goods or services that are primarily for personal, family, or household use, or require the lender to let you refinance the balloon payment before forcing collection. Balloon payment is a loan payment, ME, that is at least double the amount of previous payments, NEs, done to clear a debt. Balloon payment is a final lump sum payment due, often at the maturity date of a balloon mortgage. Balloon loan. A balloon loan is a mortgage that does not fully amortize over the term. Bankruptcy, legally declared unable to pay your debts. Bankruptcy can severely impact your credit and your ability to borrow money. Broker. Brokers are real estate professionals who have taken advanced courses and licensing to understand real estate and property management law. They manage a team of real estate agents who are required by law to work under the supervision of a brokerage. Broker is a real estate professional licensed to represent clients and manage a brokerage in their state. Brokers receive extensive education and licensing, allowing them to manage individual agents through a firm or independently. A broker has passed a broker's license exam and received education beyond what the state requires of real estate agents. They understand real estate law, construction, and property management. Real estate agents must work under the supervision of a broker.
Real Estate A1 TV executive producer, director, author, chief editor Dr. Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Let's continue. Buyer's broker. A licensee who is declared to represent only the buyer in a transaction, regardless of whether the buyer pays compensation, or a listing broker, who pays compensation through a commission split. Some brokers conduct their business by representing only buyers. Brokerage. For a commission or fee, bringing together parties interested in buying, selling, exchanging, or leasing real property. Biweekly mortgage. A biweekly mortgage is similar to most mortgages, except the buyer makes a loan payment every 2 weeks instead of every month. This actually allows the buyer to pay the amount faster, as they end up making 13 monthly payments, 26 weeks divided by 2 each year instead of 12. A biweekly mortgage payment means a homeowner pays their monthly mortgage payment in 2 monthly installments instead of 1. With a biweekly mortgage, you'll make 26 payments per year instead of 12. The end result is that you'll pay 13 monthly payments each year. It's a mortgage with payments due every 2 weeks instead of monthly. Bridge loan. Bridge loans are used to provide immediate cash flow, and as such are usually short-term with high interest rates. The most common example of a bridge loan is a homeowner needing funds for a new down payment while waiting for their current home to sell. Bridge loans are usually borrowed against a type of collateral, such as the existing property. Buy down. A buy down is when the seller of a property offers to pay down part of the potential buyer's mortgage as a selling tactic, lowering the mortgage payments and making the buyer more likely to qualify for the loan. This also allows the buyer to obtain lower payments for at least the first few years of the mortgage. In return, the seller usually raises the price of the property. A buy down is a mortgage financing technique that reduces the buyer's interest rate for anywhere from a few years to the lifetime of the loan. Usually, the property seller or contractor makes payments to the mortgage lender, lowering the buyer's monthly interest rates, which in turn lowers their monthly payments. It is an arrangement whereby the property developer or another third party provides an interest subsidy to reduce the borrower's monthly payments, typically in the early years of the loan. Buy down is a cash payment, usually measured in points, to a lender to reduce the interest rate a borrower must pay. Buy down account, an account in which funds are held so that they can be applied as part of the monthly mortgage payment, as each payment comes due during the period when an interest rate buy-down plan is in effect. Backup offer. When a buyer is interested in purchasing a property already under contract with someone else, that buyer can submit a backup offer if the first transaction falls apart. A backup offer must still be negotiated, and any monies, such as earnest money, must be submitted to confirm it is the next offer in line. There can only be one backup offer legally, as you cannot have a backup to the backup. If a buyer wants a home already under contract, they may request to be next in line by submitting a backup offer. Backup offers must still be negotiated, with any fees, like earnest money, paid. There can legally only be one backup offer on a home at any given time.
Real Estate A1 TV executive producer, director, author, chief editor Dr. Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Let's continue. Blind offer. When a buyer makes an offer on a property they haven't seen, even when it was possible to see it, that offer is considered a blind offer. It is most commonly used in a highly competitive area and/or circumstance, and used as an attempt to be first and win quickly. If you put an offer on a home without seeing it in person, you're making a blind offer. This may happen when an out-of-state buyer is physically unavailable to see a new listing. It can also happen in highly competitive markets when viewing slots is immediately filled, but a buyer still wants to compete. Buyer's agent, listing agent. A buyer's agent, also known as a selling agent, is a licensed real estate professional whose job is to locate a buyer's next property, represent their interests by negotiating on behalf of that buyer to obtain the best price and purchasing scenario for that buyer as possible. This agent is a fiduciary for the buyer. The listing agent, also known as the seller's agent, is a licensed real estate professional whose job is to market the seller's property, and to represent the seller's best interest by negotiating on behalf of the seller to secure the best price and selling scenario as possible. This agent is a fiduciary for the seller. Buyer and listing agent commissions are typically 2 to 3% of the contract price in each sale. Learn more in our post Who Pays Real Estate Agent Commission Fees. Buying agent is a real estate agent or broker that operates on behalf of a client buyer to help them find and purchase a property. Balance sheet, a financial statement that shows assets, liabilities, and net worth as of a specific date. Before tax income, income before taxes is deducted, also known as gross income. Bona fide, in good faith, without fraud. Bridge loan, a short-term loan secured by the borrower's current home, which is usually for sale, that allows the proceeds to be used for building or closing on a new house before the current home is sold, also known as a swing loan. A bridge loan is a short-term loan a homeowner takes against their property to finance the purchase of another property. It's usually taken out for a few weeks to up to 3 years. Borrower. Buyer's agent, listing agent. If someone is in the market for a new home, they enlist a buyer's agent. A buyer's agent represents the buyer in a transaction. In return for their services, they receive a fee. Buyer's market, seller's market. Building code, local regulations that set forth the standards and requirements for the construction, maintenance, and occupancy of buildings. The codes are designed to provide the safety, health, and welfare of the public. Blanket mortgage. Blanket mortgages cover more than one plot of land financed by the same borrower. This can help save time and money. For example, a seller ready to buy a second property before their first has sold may use a blanket mortgage to assess equity from the first property to put toward the second. Blanket loan. A loan often used by subdividers, where more than one property is offered for collateral and release clauses are used. Borrower. In real estate, you can pay for a home with cash or through a loan. When you pay using a loan, you are legally referred to as the borrower. Real Estate A1 TV executive producer, director, author, chief editor Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Let's continue. Bridge loan. A bridge loan is a temporary loan used while permanent financing is secured. Bridge loans often have higher interest rates. They are most often used when a seller needs funds for a new property before selling their own home. Beneficiary. A beneficiary is an individual for whom a trust works. They benefit from the trust. Bilateral contract. Bilateral contract is an agreement between at least two people or groups. Most business and personal contracts fall into this category. Blockbusting. Blockbusting is an illegal practice where real estate agents sell houses at a low price to one race, then sell those same houses at a much higher price to a minority. Breach of contract. A breach of contract is the failure to complete an agreement per agreed terms. Buffer zone. A buffer zone is a space of land between two use districts, such as a park, playground, or highway. The point of a buffer zone is to ease the transition from zone to zone. Bundle of rights. When a person purchases property, he or she is given the rights to the property. These rights can be split up and given to different parties. Bundle of rights is ownership of all legal rights to the land, including possession, control, disposition, and enjoyment. Bundle of rights is ownership in real property implies a group of rights, such as the right of occupancy, use, and enjoyment, the right to sell in whole or in part, the right to control the use, the right to bequeath, the right to lease any or all rights, the right to the benefits derived by occupancy and use of the property, etc. Buyer's home sale contingency. This contingency allows the buyer to cancel the contract if they are unable to sell their current home in a specified amount of time. Basic sales price, BSP. Price of an apartment excluding the charges for amenities like car parking, clubhouse, etc. Beneficiary. A person or persons or an institution designated to receive an income from a trust, estate, or deed of trust. Building code. Based on the notified safety standards within a specific area, a building code is a regulation that defines the design, construction, and materials used in a building. Building codes are the rules and standards of properties for the protection of public safety and welfare. Built-up area. It includes the carpet area plus thickness of the outer walls, and the area of balcony or balconies. Balloon loan. A loan with partial amortization and a final larger payment. Baseline. It runs east to west and crosses a principal meridian at a definite point. Benchmark. A permanent reference mark or point established for surveyors to measure differences in elevations. Beneficiary. A person who receives the benefits of a trust or gift. Bilateral contract. A contract with simultaneous duties or obligations by both parties throughout the contract. Breach. Failure to perform one's duties. Bill of sale. It's a written instrument given to pass title to personal property. It's the paperwork given to pass title to an individual property.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Let's continue. Bond. 1. A written agreement purchased from a bonding company that guarantees a person will properly carry out a specific act, such as managing funds, showing up in court, providing good title to a piece of real estate, or completing a construction project. If the person who purchased the bond fails at his or her task, the bonding company will pay the aggrieved party an amount up to the value of the bond. 2. An interest-bearing document issued by a government or company as evidence of a debt. A bond provides predetermined payments at a set date to the bondholder. Bonds may be registered bonds, which provide payment to the bondholder whose name is recorded with the issuer and appears on the bond certificate, or bearer bonds, which provide payments to whomever holds the bond in hand. Mortgage interest rates are closely related to long-term bond interest rates. Bonus to selling agent, BTSA. Compensation, above and beyond the sales commission, is offered to the real estate agent who brings the buyer to the transaction. A BTSA is used to provide an extra incentive for real estate agents to show a particular listing. Often the bonus is tied to closing within a certain time period or the property selling for a certain price. A buyer's agent should not consider the BTSA a factor in any negotiations between buyer and seller. Realistically, most BTSAs tend to disappear during initial negotiations, even though they should never be considered negotiable after they have been offered. Any bonus to the selling agent should be contained in a written agreement between the seller and listing broker. The listing broker technically offers the BTSA, not the seller, and therefore should not be a subject of negotiation. Breach of contract. Failure, without legal excuse, of one of the parties to a contract to perform according to the contract. Building line. A line fixed at a certain distance from the front and or sides of a lot beyond which no structure can project.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Bailiff. An official of a court who is usually a sheriff's officer or deputy. Bailment. The delivery of personal property to be held in trust for a certain purpose, along with a contract under which it is either expressed or implied that the property will be returned or accounted for once. Balance sheet. A statement of the financial condition of a business at a certain time, showing its assets, liabilities, and capital. Balustrade. A supporting column of a stairway handrail. Band of investment. Band of investment is a financial method of calculating an investment property's capitalization rate by using a weighted average of an investor's expected returns for both equity and debt. The band of investment method considers both assumed returns a real estate investor would seek for a loan, assumed interest rate, and an expected return an investor would seek for an equity investment. The BOI method then uses a weighted average of these rates of return, typically based on the percentage of equity to debt a project employs, to determine the overall capitalization rate, cap rate, to use in valuing the property. As an example, assume an investment property is acquired by using 25% equity and 75% debt. Bargain and sale deed. A deed that conveys title to real property, but does not guarantee clear title, is often used by court officials and fiduciaries who only hold title by force of law. Barred. A prevention of legal recovery under the statute of limitations, because the statutory time period has passed during which a party can legally assert his or her rights. Barter. The exchange of goods or commodities for other goods or commodities. Base and meridian. The imaginary lines in the rectangular survey or the government survey system, where the baselines run east and west, and the meridian lines run north and south, which are used by surveyors to establish .ne. Baseline. The parallel lines, which serve as a reference line for other parallels as part of the rectangular survey system. Bearer instrument. A security document that does not indicate who is the owner and which is payable to whoever possesses it. Bedroom community. A suburban community in which many workers from a major city live. Beltline highway. A limited access highway surrounding a city. Benchmark. A permanent monument placed on durable objects at important points by surveyors to establish the elevation of the point, usually relative to mean sea level, for tidal observations or local topographical. Beneficiary. 1. A party entitled to the benefit of a trust. 2. A party who receives profit from an estate, the title of which is vested in a trustee. 3. A party to whom an insurance policy is payable. Beneficiary statement. A statement of the unpaid balance of a loan and the condition of the debt, as it relates to a trust deed. Bequeath. The giving of personal property by will. Bequest. The personal property given according to the terms of a will. Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Betterment. An improvement to property which increases the value of the property, which is considered a capital asset, rather than repairs or replacements where the original character or cost remains unchanged. Biannual. An occurrence that happens twice a year and means the same as semi-annual. Bilateral contract. A contract under which two parties exchange promises for the performance of certain acts, such as when Mr. A promises to buy Mr. B's house and Mr. B promises to transfer its title to Mr. A. Bilevel. A house built on two levels, where the main entrance is situated above the lower level, but below the upper level. Binder. A written agreement to consider the down payment for the purchase of real estate as evidence of good faith on the part of the purchaser. Blacktop. Another term for asphalt paving. Blanket mortgage or blanket trust deed. A blanket mortgage or a blanket trust deed is a loan covering two or more properties with the same terms for all properties under the same mortgage. A blanket mortgage is used to buy or refinance multiple properties under one loan, making it easier for a real estate investor to receive the same terms for multiple properties. Commercial lenders often offer it for real estate investors, such as landlords, who plan to buy and hold properties for long-term investments. A blanket mortgage can be easily divided per asset or property, so the investor would not need to refinance the loan or pay in full each time a property is sold. This feature can be useful for flippers, landlords, and even land developers. Bleeding a project. 1. In new construction, overstating expenses and fees to divert a larger than normal amount of the project costs to the developer's profit. Biennial. A occurrence that happens every second year. Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Blight. The physical decay caused by the failure to maintain the quality of the real estate and public services in a neighborhood. Blighted area. A district affected by detrimental influences of such an extent that real property values have seriously declined due to adverse land use and/or destructive economic forces. Blockbusting. An illegal practice of unscrupulous people of inducing an abnormally high turnover or panic selling of homes at prices below market value by exploiting the prejudices of homeowners. Blue sky laws. The federal and state laws that regulate the registration and sale of investment securities. Board of Equalization. A state agency that determines assessed value of public utility properties, supervises county assessors and tax collectors to create uniformity in tax assessment, and also collects state sales. Board of Zoning Appeals. See Appeals Board. Boilerplate. The uniformly agreed upon standard language found in contracts, often seen in pre-printed material. Bona fide. In good faith and being authentic, and without fraud or deceit. Bona fide purchaser. A party who purchases a particular property in good faith, paying a fair consideration in the belief that there was no notice of any adverse claims or rights of third parties. Book depreciation. An accounting concept in which an allowance is taken to recover invested capital. Book value. The current value for accounting purposes of an asset is expressed as original cost, plus capital additions and less accumulated depreciation. Bounds. A reference to direction. Branch office. An additional real estate business location that is different from the main office in which business is also conducted, but is managed by another licensed real estate broker on behalf of the broker of. Break-even point. The amount of income needed to simply meet the total amount of expenses for a project. Bridge financing. An interim loan is made to facilitate the purchase of a new home before the buyer's current residence sells, and its equity is available to fund the new purchase. Broker-salesperson relationship agreement. A written agreement required by state regulations to set forth the material aspects of the relationship between a real estate broker and each salesperson or broker performing licensed activities. Room clean. A description of the condition that property will be in, such as floors cleared of trash and swept when turned over to the buyer or next tenant. Brownfields. A commercial or industrial site abandoned by an owner, which often contain toxic waste materials. Brownfields legislation. The federal and state laws that provide funding to localities to facilitate brownfield site clean. Buffer zone. A segment of land between two disparate municipal zones, which acts as a shield to keep one zone from encroaching upon the other. Often used to separate residential districts from commercial areas. Builder warranty. A guarantee of the quality of construction offered by a building contractor or developer. Also known as a homeowner's warranty program. Building capitalization rate. In appraising, the capitalization rate is used to convert an income stream into a lump sum value, and where the rate for the building may differ from the land because the building is considered.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail, and our entire team of hundreds of presenters want to educate you about real estate. Let's conclude. Building codes. A systematic method established by ordinance or law of regulating and setting minimum construction standards for buildings within a municipality to protect the public safety and health. Building contract. An agreement relating to the construction of a proposed structure between an owner or lessee and a building contractor, which sets forth the terms. Building inspection. 1. A physical review of property as construction progresses to ensure that each major component, foundation, plumbing, electrical wiring, roofing, materials, meets the building codes. Building line. 1. A line established by law or a deed restriction that determines the distance from a street in front of which an owner cannot build. 2. A line fixed at a certain distance from the front or side. Building paper. A heavy, waterproof paper used as sheathing protection in wall or roof construction. Building permit. The authorization by a local government for the erection, alteration, or remodeling of improvements within its jurisdiction. Building residual technique. In appraisal, a method of determining the contribution of an improvement to the current value of the entire property. Building restrictions. Limitations established by zoning legislation, covenants or deeds limiting the type, size, and use of buildings. Build to suit. A contract whereby an owner of land offers to construct a building on his or her land as specified by a potential tenant, and then to lease land and building to that party. Bureau of Land Management. A federal bureau within the Department of the Interior that manages and controls certain lands owned by the U.S. Bylaws. The generally self-imposed rules for conducting the internal affairs of a corporation or other organization, such as a homeowner association, to regulate the day-to-day operations. Buyer-agency agreement. A principal-agent relationship in which the broker is the agent for the buyer, and owing fiduciary responsibilities to the buyer or principal under the law of agency.